Now, remember, when price gets to this level, what's going to happen? We're going to start seeing this is what's going to happen. Price is going to do this. And then it's going to try to pull it back. So you take your profit right here, get out of that trade, and now you look to get back in on this trade right here. Right? When it comes back here, you get back in again. You make your profit going up again. You get out. Now, when it gets up to that fifth wave, you're going to get a deeper retracement move. Then you can go to a 4-hour time frame, and you'll see a much smoother swing that you can trade with a low and high. And then you can go ahead and look for that retracement and look for a much higher target to the upside. So this is what you do. For those that don't have a strategy, right? So what you do is this. You start off with a 15. If a 15 doesn't look good, you go to the 1 hour. You trade that swing. When that swing is completed, a 5-wave structure, then you move that up to the 4 hour. And what's going to happen is the 4 hour is going to have a swing just like we have like this, because every time you add, every time you take away candles, you're building up a more smoother swing, high swing low. And so you on the 4 hour, you'll have a swing like this. Then you're looking at the market retracing on a 4 hour, you'll have a much higher target on the 4 hour. So you extend your targets, you increase your profit potential, but also you got different swings. So if you thought that a trader cannot trade one currency pair and make a whole bunch of money from one currency pair, you are mistaken. You don't have to trade 28 currency pairs, all right? Now, if you want to diversify your risk across the board, that's fine. But in order to be successful in trading, you don't have to pay attention to 100 currency pairs, all right? You just need to go ahead and pay attention to 1 or 2 and become a master of those and trade different time frames. I call it a gear up, gear down trading approach. And so what you're doing is you're just gearing it up, gearing it down, and you're trading different swings. Gear up, gear down trading approach. And so what you're doing is you're just gearing it up, gearing it down, and you're trading different swings. So I got a question for you. All right, I've got a question for you. And the question is this. The question is this. If do you believe that the market trends 70% of the time and consolidates 30% of the time? If you believe that statement is true, type up a yes or a no in the chat. If you believe that the market trends 70% of the time and consolidates 30% of the time, type up a yes or no in the chat. All right, Joseph says no. No? All right. Good, because that statement is incorrect. All right? Now, let me go ahead and put it this way. Do you believe that the market consolidates 70% of the time and trends 30% of the time? Type up in the chat if you believe that the market trends, or at least consolidates, 70% of the time and trends 30% of the time. Type up a yes or no in the chat if you believe that statement is true. Okay. So I'm not going to say whether it's true or not, but I'm going to say this. If I take a 1 hour time frame, let me put it this way. If I take a daily time frame, here we have the pound Swiss franc range bound right here. Now, the statement we said earlier on is that the market consolidates 70% of the time and trends 30% of the time. All right. And a lot of traders answered yes, that statement is true. So I'm going to go ahead and throw a curveball right here. The market can actually trend 100% of the time. Do you know that the market can actually trend 100% of the time? And the reason why I say that is because it all depends on the time frame. You see, you can take a daily time frame, and even though the daily time frame is range bound, if you take this down to a 1 hour time frame, you will find a trend on the 1 hour time frame. If you go to a 15-minute time frame, you may find a trend on the 15-minute time frame. So which means that you can actually take a currency pair, one currency pair, and you can trade it right through the year and trade that right through the year. You just have to use a gear up, gear down trading approach. And so, which means that you go down on a, and let's go ahead and do that exercise, right? Let's go ahead and do this right here. Let's take a look. So we can justify what we're saying is true. And I'm going to go ahead and move this to a 50-minute time frame. Now, can you, if I go move this to a 50-minute time frame, can you see trends on a 50-minute time frame right here? Where we saw consolidation, can you see that there's trends now on the 50-minute time frame? That's about all the data I can bring. Yeah, we had an uptrend. Yeah, we had a downtrend. Yeah, we had an uptrend. Yeah, we had a downtrend. All right. So you can see that it doesn't matter, all right, what currency pair you're trading. If you're interested in a currency pair, all you have to do is gear it up, gear it down.